Welcome to readtheticker.com. Today we're going to talk about point and figure charts. 95% of traders do not use point and figure. This is a huge mistake. This is most likely due to the confusing way point and figure software presents them. Most average watchers of charts say point and figure charts are great for support, resistance, and relative strength watch. This of course is true. But more so, point and figure charts are an excellent price and volume wave watches. Well, our charts are, for example. Wyckoff used point and figure charts to see the cause, that's a base pattern, with a possible effect, that's the breakout. Plus he added volume to the point and figure bars to watch the price and volume waves move together. This was pure tape reading. Now here's a reference for our members to see the settings of the charts that follow. Here is a S&P 500 ETF SPY point and figure chart. Now as you can see, this is the main chart. I've actually got the red and blue bars without the X and O's. I've just sort of made them bars. It has automatic support and resistance. As you can tell, we're on a new high, so all the lines are support. And we can see the concentrations of support at 142, 136, and 154, and 156. Scroll down here, we have per bar, three types of volume. We have total volume per bar. We have net up and down volume per bar. And we have average volume per bar. I'm just going to concentrate on net volume per bar. So I'm just going to select this one on. Where are we? Net per bar. Right. Now, the net volume per bar is, for example, this bar here might be made up of 22 days. It'll have up and down days in it with price action, higher closes and lower close. When a volume is a positive bar, that means the close was higher. When the volume is a negative bar, that's when the close was lower. For example, down here, this price chart you see down below here is directly attached to the point and figure chart. So you can look at a candlestick or an open high low close chart and view the PNF chart exactly on the same presentation. For example, here the red bar is a down day, the blue bar is an up day, the red bar is a down day, exactly like the candles are. So these are up and down volumes. So net volume is a summation of these bars, volume bars, per the PNF bar. Now, if I'll just show you the example I have. Where are we at? Right, position. Okay, here we have, this is the S&P 500 ETF SPY. I've marked out four waves, down, up, with the volume bars below there. So these four waves represent the last four bars in this chart. There's the down, there's the up, there's a little down, and there's the up again. Okay, so that's how the point and figure charts resemble price waves. You see this movement here? You see the movement there? As you can sort of see there, this little punch down below support is a bit of a test, bit of a shakeout. So it's actually a good entry on the buyback. A bit of a power buy there. So when you scroll down to the net, this is net volume per bar. So per wave, I would add up for one, all these red and blues here, stick it into that, as you can, this little red bar here. The two is the up, so as you can see, most of them are blue. So the net volume is blue, it's quite high. And then you have the little three, which is a little down. I think it's got one red bar and one little blue one. So that's see how it's not a very large red bar because the blue and the red offset each other. And we've got this last wave up, we got a little bit of a larger blue bar because most of the volumes close on the high. So that's the summation of net volume per bar. The example of price waves. What you can do, for example, you can look at this rally here. I can just put my vertical highlighters on. You can see here in the net volume, as there's mostly extreme blue bar showing up. most of the times the net blue bars, i.e. the net up volume, dominates the red. We had a situation here which was a down day. There's quite a strong red bar. So you have to sort of say it was the first challenge to the trend there. If this was a November 19 low, the sequester or something was going on, I don't know. And here we had the a first test, you would say, on pretty good volume. This was actually a good buy point because the recovery, when Obama said it was, I think it was the debt setting was delayed and it just took off, gapped up and continued on. But from here onwards, you can see that no red bar has dominated. So all the volume is on the ups. The only heavy selling we had recently, just sort of heavy selling, was just here. I think it was before the FOMC meeting. So people were taking profits. It created a bit of a punch down below support. And then as you can sort of see, the buyers just came screaming back in. So here, you can quite confidently say on this bar here, yes, there was selling, but there was no liquidation. Now, to scroll down to my candlestick chart, this is the situation just prior to the FOMC meeting. We had the high red bars of the selling, but you would say that was a lot of effort for no result because the volume was actually quite high, but the price action did not move down very far. Now, like I said before, Wyckoff, you would use point and figure charts for cause and effect. For example, there's a horizontal pattern. If I just do two horizontal lines, that little box there is my cause, and here's my effect. And here's another situation where I've got a nice base accumulation pattern. Just put a little red line there. So here's my box. Here's my sideways accumulation pattern. That's my cause and my effect. So Wyckoff would not trade a breakout until he had a coiled spring or a cause to show that prices are accumulated and be ready to marked up. Right, so everyone wants to talk about gold. So let's have a look at gold. GLD ETF. Now this is very interesting. Now I'm just going to my vertical lines on this down move here. All right. Now, as you can understand, here's a lot of these lines are automatic support and resistance because the price is down here. The automatic support and resistance is red because it's now resistance. But above this point, above 158, this was a punch up, and you probably would have thinking, well, that's a 38% retracement. Oh, that's a 50% retracement. Maybe it's a 60%. Then the Fibonacci folks are saying, oh, this is going to take off because it's only pulled back to support, and then it's going to take off again. Well, the truth of this down move is that between September and May, no blue bars dominated. It's dominated by net volume of red bars. So as you can see here, all these blue bars punching up here, not one of those blue bars by volume dominated the red bar. So there's no buying. If there's any buying, it was just had no follow through. For example, the people, this bar here, see here we had a strong punch down in red, and then we're on strong support. So some folks thought for a couple of weeks, well, let's buy that up there. This is support. The volume came in, but look, there's no excitement. The blue bar did not dominate any of the red bars. Sure, it was a little bit higher, but it didn't dominate this. So let's say we give the bulls a buy. So they brought there. Then the next bar there was nothing on the down. So okay, that's fine. But now the bulls should turn up on this second blue bar here. You see here the net volume is pathetically weak. Any buying there was smashed down with selling, and obviously the sell move started. So if I scroll down to my point and figure, to my candlestick chart, here's the down move on the large volume. Here's the punch up, and here's the sell down, and here's the punch up. This last move here I have my cursor is where the volume was pretty pathetic on the upside. There was no reason to get excited about being bullish because no one was chasing this up. Okay, then we had the sell down, a pretty strong volume, and as you can see here, the volume on this move up here, that big blue bar there, is pretty attractive. Everyone said, right, this is cheap, I'm going to have a go. As you can see, moving on to the current activity, the selling is actually happening this week. I think this is the last day of the week, so this is probably pretty much in total. At the moment, that is not a liquidation. That is not a smash down to testing lows. It may still float down to 134 or whatever, but until you see the strong volume come on the downside, it really is just simply a test at the moment, until further data comes in. So that's where you can look at price action and waves relative to volume to see whether it's moderate selling, liquidation, strong buying, weak buying, to see where the strength of the move is. So if you saw this chart and you were one of your Fibonacci traders or whatever you're up to, and you said, well, this is going to take off because it's going to bounce and support you, would have to ask yourself, well, where are they? Where are the bulls? Because quite frankly, they weren't present. Well, that's a quick show off of the point and figure charts of readtheticker.com. Hope you enjoyed that. Thanks for watching.